Hello and welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, December 27th, 2013. Market breadth. With this past week's market decline, our bull-bear point and figure ratio rose from 1.50 to 1.82, advancing within bullish territory. The total count of securities in bullish or bearish patterns advanced 3% to 2,436. The count of bearish stocks decreased 9%, while the count of stocks in bullish patterns increased 11%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 16 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 144 points for the 9th rise in 21 weeks. At a positive 312.47 points, it remains above the November 2011 top and below all 8 other tops above plus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 1 accumulation day and 3 distribution days. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Monday, 12/16 close, we received a zero-line reject entry long signal. The next day, the CCI 20 dropped, but stayed above the zero-line reject pivot point, so we stayed in the trade. For the second week, the CCI 20 is over plus 100. We will exit the trade when the CCI 20 drops below plus 100. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 45 weeks ago, while the daily CCI 20 began a Woody's uptrend 14 weeks ago. The weekly CCI 20 continues above plus 100 and remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 are negative. Bullish disk drives has entered the top 5. Computer hardware continues in the top 5. Networkers has re-entered the top 5. Gold and silver remains in the bottom 5. Bearish, REITs remains in the bottom 5. S&P Retail has re-entered the bottom 5. Brokers has entered the top 5. Oil has left the bottom 5. Focus this week. 2014 will be the year of the currency reset and gold-backed trade note. From the article, a couple of pull quotes. At least 23 nations have already prepared for a new trade system that will occur outside the dollar and SWIFT systems. Through their moves away from a reliance on the dollar via the creation of new currency swap lines, major economic powers are transitioning away from the 42-year-old petrodollar system that saw America devalue its currency nearly 98% and export inflation to the rest of the world. A global currency reset is inevitable, especially when you consider that the historic life cycle of a purely fiat currency is only 30 years, with a maximum length of 42 years. This falls in line with the US dollar, which has been a purely fiat currency since President Nixon took America off the gold standard in 1971 and subsequently allowed the central bank to grow the economy with debt rather than sound money and real production. 2013 will go down in history as the year of global currency wars. But intermixed in this financial conflict will be the rise of China and their plans for a new financial order. And as Dr. Willey points out in his assessment for the coming year, when the global currency reset happens, the vacuum that will occur will not be void for long, and will be quickly filled by China with two new options that promise greater stability than what the U.S. had offered for more than a decade. And there is more if you go to the article. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary. Wishing you a happy new year and true success in 2014.